All right, super. Thank you all, everybody, for coming. Today, I'm actually going to give you a little bit of a treat. I'm going to talk to you about how I trade news reactively, but then I'm also going to show you a couple of one other setup that I do continuously. First of all, I'll put in links to everything that I do. I do a website called YouTube/BKTraderFX, which I'll put the link in to a little bit later, that contains all of the videos that describe a lot of the stuff that I'm going to talk to you about today, and much more so. But the overlighting, yeah, there's going to be a recording for this, right? We're all going to record. This is all going to be recorded, absolutely. The critical thing that I do, what I primarily trade, is what I would call the microstructure of the market. That means I trade the market on a very, very short-term basis. And the reason why I do this is because those of you who sort of, I think, follow the market for a while can get an idea that the markets are unbelievably difficult to handicap over any reasonable amount of time, because so much stuff happens throughout the day. So much news flow occurs during the day, so that you can have one position in the morning, and that assumption completely changes at night. Does everybody see the Kiwi dollar chart? I just want to make sure everybody's seeing the Kiwis. The bottom line is that I find it extraordinarily difficult to predict. Okay, so the point being is that the reason why I focus on such a short-term structure is because I find it extraordinarily difficult to consistently handicap the longer-term price action. And I think that's kind of like basically the problem of a lot of people who trade. You have an idea one way, you have a technical setup one way. The technical setups that work on one day absolutely do not work on the next day, because the news structure of the situation is completely different. New setups that work one day completely don't work on the other day. And I think that's the critical thing, that because the news flow changes so much, and because market expectations change so much throughout the day, throughout the months, it's very difficult to come up with a consistent long-term structure setup, at least for me. So I always focus on the much shorter-term time frames where the consistency is actually much, much greater. It's sort of like the idea of predicting weather. If it's raining, you have about a 95% confidence, sometimes even 99% confidence level, that it's going to rain 5 minutes forward. But you really don't have anything more than a 50% confidence level that it will rain an hour forward, or it will rain, a day forward. And that's why it's a sort of a similar situation with price flow. The farther away you get from the instance that things are happening, I think the less of a chance you have of predicting the directionality of the move. Now, many people will argue with me, and that's fine. And there are plenty of people that trade the much longer time frame and argue that's a much better way of doing it. In some ways, I could agree, but just my own personality and my own view of what I'd like to do focuses on the microstructure of the market. So given that kind of a construct, one of the things that I always focus on is trading news. Now, Kathy last week showed you how she handicaps the news ahead of time. Her strength is basically trying to figure out how will the news actually print. I find that to be a lot more difficult to do on my own personal level. And what I like to do is I like to react to news, because my whole idea is I don't want to guess the number. I want to be able to react properly to the number. But, right, she goes with the odds of previous reports. Completely legitimate, completely valid way of trading. My whole point is that I want to know the knowledge, and then I want to construct a setup off of that knowledge. The thing that's kind of, I think, interesting, and I think that many of you will find completely counterintuitive, is that after a lot of work and a lot of research, I've actually come to the conclusion that trading the news is much, much more consistently accurate if you fade the big surprise on a very short-term basis. And let me show you what I mean. Basically, let's imagine news is extremely negative. The market is expecting a positive number. It prints negative, and price collapses. The natural response is to sell the currency, because that means it's negative news. People are going to be selling the currency. But the actual smart move to do on a short-term basis is to buy the currency. Similarly, if the news is super positive, currency skyrockets, 100 points after the news event, everybody's trying to rush in to buy it, the natural instinct is to go buy the currency. But the smart trade, in my opinion, is to actually sell the currency. It seems counterintuitive. You're going against what is fundamentally true in the market. But let me explain to you why, on a very short-term basis, that's actually the smarter trade. The reason why is because think about what is happening when this event happens. We have an event in the marketplace. This event occurs. A new piece of information comes into the marketplace, and there is a huge vacuum of liquidity. Everybody who is guys, hold on, just hang tight with your questions. I'll come back to you. Let me set up the context for this setup. Basically, the markets are very efficient. They adjust their prices very, very quickly to the new reality that the market has shown. More importantly, who is creating the liquidity? It's the dealers. It's the intermarket dealers, right? So, for example, if everybody decides to sell the currency, who has to be the buyer of last resort? It's got to be the intermarket dealers. Those intermarket dealers have to inventory very quickly quite a lot of product, very, very fast. And because they have to inventory all that product against the prevailing consensus of the market, they have to be able to flip it out, even at a small profit, quite quickly off their hands. So what will typically happen is the dealers will take prices down to a fair market point, to actually what I would call the unfair market point, that is the point of extreme on the sell side, or take prices up to the point of extreme on the buy side, right? The late buyers or the late sellers will jump in, and then prices will come back in, causing a lot of stops to trigger to the downside, and the dealers will then be able to collect that initial retrace. Because what we're looking for, we're not talking about a major move off of this thing. We're talking about just the initial retrace off the news reaction, which is why trading the news in a reactive manner is actually much more intelligent when you trade like the dealer, when you think the opposite of the crowd. Now, I just want to make sure that I'm being very, very clear here. It doesn't mean that I'm arguing that you should fade every single event and stay on the opposite side of that news continuously. It doesn't mean that you have to fight the tape. It certainly doesn't mean that you should add to the position. What I'm talking about is a very short time frame from the release of the news to the initial price reaction to the correction that happens within the 10 to 15 minutes post that time, where you can take the advantage of the overreaction of the shorts or the longs, come on the dealer side, and basically make a small, quick scalp. In the particular setup that I trade with a 10-point target, 20-point stop. It's a negative risk-reward ratio. It must be 70% accurate in order for it to be profitable overall. So you clearly must be selective, and you clearly must believe in the validity of the setup in order for it to happen. But I'm going to show you a couple of examples right now, just to give you an idea of exactly how this trade works. So this is like a broad market view, and I'm going to show you a 1-minute view of this particular trade. There's obviously not much news in the currency market last night. So the only trade I had in front of me yesterday that I could bring to you guys today and show you this concept in practice was the Kiwi retail sales. Those of you who may have been up at 4:45 afternoon Sunday time, which is when the report printed. This is when the Australian session just opened up. What you'll see is that the Kiwi news. Hang on a second. Let me I just want to see what bear with me. I just want to see what the number was. It was, okay, so the number was forecast at -3, right? And, wait, where am I? How can I find you guys? Okay, yeah, right. So, the news was -3. It actually printed -1.1. Very, very negative. What you see in the 15-minute chart, what you see is that the Kiwi just dumped. There's a major gap down, right, on the event. Basically, market makers and the market itself takes the price down like 50 points off the close on Friday. But, and here's the thing, if you were a seller here, there was very little additional selling room here. On the other hand, after about 2 or 3 minutes, and let me show you the actual. Okay, so anyways, what I do is I actually wait on a 1-minute chart for the 1-minute candle, and I was a little bit late here because I was sort of scrambling. It was the beginning of the session. I wait for the 1-minute candle after the news event. To print green. In other words, if it's a negative event, I'm waiting for the first 1-minute candle after the news event to become green. If it's positive, I'm waiting for the first news event after the first 1-minute candle after the news event. This is very important. After the news event to turn red, and then I'm selling at market or I'm buying at market with a 10 stop and a 20 target, and I basically try to make generate 70% accuracy rate, hopefully even a little bit better. And most of the time, what you will find is that you are going to be able to get that retrace. You're basically going to be able to come in with the market makers at the peak of selling interest, at the peak of buying interest, and be able to take the 10 points in a much less, what I would call a much less stressful manner than if you had followed the price in the direction of the trade. Because what happens very often is that when you follow the price in the direction of the trade, ultimately, yes, the trade does work out that way, but it has these big retraces. Sometimes the big retraces actually stop you out. Sometimes they're minus 20, minus 30 on the retrace side. And my attitude is I'd much rather try to capture the very consistent 10 points on the retrace rather than try to bet on the idea that the news is worthy enough and valid enough to work this out. Now, Jeff's asking a great question. He's saying, what time frame works out better for this 1-minute or 5-minute chart? I generally prefer the 1-minute chart, but you can also use the 5-minute chart. In other words, the chart. Okay, guys, I'm sorry. There's so many questions. I'm trying to focus. The 1-minute chart, to me, gives me a little bit earlier entry. The 5-minute chart is going to give me a little bit later entry, but generally the 5-minute chart sometimes can be better because, you're going to get sort of sometimes occasionally a fake out on the one. You can come in a little too early on the 1-minute chart. But generally, I have used the 1-minute chart as my entry point. When the 1-minute candle turns the opposite of the news, I'm going to come in. Yeah, I'm actually going to show you what trade specifically you would need to trade on this in order to make this a legitimate trade. Yeah, absolutely. Spreads widening, great question. You want to trade this through broker-dealers that generally do not widen spreads substantially. Also remember, I am waiting after the event. So typically the spreads widen out pre-event. They stay wide. If the spreads are staying wide for more than a minute after the event, then you should be giving up your broker because at that point, liquidity returns to the market and the broker is just keeping spreads wide unnaturally. So my recommendation is find a broker that keeps spreads relatively steady and trade through that broker. I use 20 pip always as my ultimate stop. If I lose, I don't care because I'm going to have 6, 7, 8 opportunities a week to trade, and I don't ever use fibs. I don't care about anything else because when a news trade happens, what you'll notice very frequently is it will bust through a huge amount of technical resistance. This is a purely, I guess let me put it this way. I am trying to trade this like a dealer. Dealers really don't care about fibs. They don't care about moving averages. They don't care about anything else. They care about liquidity and price flow. What I'm trying to trade here is the points of maximum liquidity pain and price flow. I can't recommend brokers, but of course, I will tell you that my own broker, GFT Forex, does a great job in keeping spreads steady. And I generally trade a lot of my news trades through my own broker. Okay, so I'm just trying to understand your question. If I ever trade the initial spike fade, look for the next reaction high, break with continuation like the euro did the other day, spike then. That is my favorite high probability method. it sounds way complex to me, Genius. My whole idea is I'm just trying to trade the initial reaction. I don't try to trade the second or third reaction post that. On this particular setup. This particular setup, all I want to do is just trade news flow counter to the idea. Great. Harley's asked me, how much time does it pass before I finish the new setup? It's a great question. My answer is no more than an hour. If you're in a trade for an hour, in other words, if it hasn't retraced to your stop in an hour, you should just get out at whatever price you can. Generally, the trades last between, sometimes as short as 3 or 4 minutes, but generally it takes between 15 to 20 minutes to fully actualize. That is, from the time you enter to the time you come back on the retrace, you get about 10, 15 minutes, because remember, all the late longs, late to shorts come in, they're looking for a continuation, doesn't happen, you get a retrace, the stops get triggered, all those guys come out, and then maybe the second true mover actually comes into the play. Jack, I don't do either one. I am fading the initial reaction. I hope everybody's clear here. I don't try to buy on the retrace. I don't try to chase anything down. I'm actually going the opposite of the news. You have to be comfortable. Carly's absolutely right. You have to be not hasty. You have to wait for the number to come out. You have to have the first initial reaction. You have to be patient. The critical aspect of this is you got to be like a sniper. You got to be like a sniper. And yeah, Osman is doing a great job of summarizing my ideas. Thank you very much. Since I can't talk and type at the same time. So I think, no, actually, you know what? I'm sorry. You're giving them the breakout strategies. That's a different strategy than the one I'm talking about. I'm actually talking about the idea here of doing the opposite for this particular trade. I'm actually talking about using liquidity in your direction. So you would flip around all of those factors. The targets and the stops are the same, but I would actually be a seller at the high, a buyer at the low, as you can see in this particular Kiwi dollar example. Let me show you one more example. All right, let's just bear with me. I'm gonna show you one more example that you guys can see. Okay, tell me if you guys can see this chart in a pound dollar. No, oh wait, pound dollar just went away. All right, I think I'm gonna have to do this again. Okay, so this is UK PPI. I don't know. I would definitely apply this to non-farm payrolls, because obviously, the trade non-farm payrolls typically always reverse their initial trade. I don't know what GDP. To GDP, yeah, I would definitely. You could trade this with GDP as well. But remember, the critical thing here, guys, is you're looking for a surprise. There are three things that must work here. You have to have a meaningful news release that matters to the market. The news release itself must be a big surprise to the market. Prices must move in a pretty substantial direction, one way or the other. And only if you have those three conditions are you going to go enter the opposite of the news to take advantage of the retrace. Once you get some kind of a technical indication that momentum has paused, and that pause is 1 minute chart or 5 minute chart. I actually, Boyke, I don't think. Well, I don't think newbies will be hurt by this strategy any more than experienced traders are, as long as they follow the critical rules. I am always entering with a 10-point target, 20-point stop in my trade. My stops and my limits are always attached to my trade when I enter. I never move my stop. I always stay very, very disciplined. So, yeah, I would suppose that this does require discipline. This does require ability. This does require sort of guts to hold a position that seems so counterintuitive, and it does require a negative risk-reward ratio. So, yeah, I suppose for newbies, this is probably going to be a strategy that you want to test on a demo at least 5, 10, 15 times before you get your timing right. But the other way to trade this is you can always trade it with small amounts of capital. You can trade it with mini lots or even micro lots, just to get a feel. Because one of the things I think is very important to me, and I'm a big believer of this, the only way you're going to stop being a newbie is by starting to lose money. You're never going to get good in trading unless you start to practice. And practicing requires the ability to screw up. So, therefore, what I would do is just simply use small amounts of capital. But I would learn how to time this, because this is both an analytical and a timing setup, but it's one that has worked really, really well for me. It's a very high probability setup for me over the last 4 or 5 weeks that I've been trading it. I just wanted to show you this one other example. UK PPI comes out very, very hot last Thursday, right? Here's the big move. Remember, I'm actually waiting all the way till 4:45 before I get short. And here's the reason why I give myself 20 points. I don't give myself 10 or 15 points, especially in currencies like pounds, because you will have sometimes last-minute gasp continuation moves. And the one thing you don't want to do is you do not want to get stopped out unnecessarily. You don't mind getting stopped out, but you must give yourself enough room to legitimately see if the setup is valid or not. To me, the 20-point stop gives me enough room to see if the setup really works out. So as you can see, it really goes against me quite a lot, but then it comes right back in and boom, plus 10 on this particular setup. It actually came in all the way down. It was just a much better setup than you wanted to. Now, for those of you, by the way, who have a longer time set and a longer mindset and are willing to kind of design your own idea, in my opinion, you can easily trade this with 2 lots. You can sort of come in, make your first plus 10 on the initial retrace, and then if there's a serious continuation in the trade, if there's much more downside, you could trail the other half of the position, trying for a much longer and bigger turn. That's going to happen very rarely, maybe 2, 3 out of 10 times. But for those times that it does happen, it could be a very substantial, sometimes as much as a 50-point move. So it all depends on your preference. I'm simply giving you a recipe for what I consider to be a building block of an idea that works quite well. You guys can then obviously modify it to any which way you want. Everybody's asking very good questions for Trade Daily. I include my spread. So plus 10 must mean it must make the spread to give me plus 10 profit. Minus 20, I have to include the spread in minus 20. So another reason why I have to have such a negative risk reward, because the spreads themselves are obviously going to make this a negative situation. So Hasni is just asked me the perfect follow-up question. Let's take a look at, give me just 1 second. I'm going to pull up the, bear with me. I want to pull up the, I'm going to pull up the calendar. We're going to go through every single thing this week that I think is worth trading. Okay, everybody sees the calendar? All right, super. Genius, this is the thing I'm trying to tell you. I wait, and if you wait for a minute or two post-news, the spreads really get tighter. You know, you can trade this. Yeah, I mean, it's not an optimal platform. To me, the optimal platform to trade this is GFT. I'm simply using this because I wanted to show you where the marks are. I can't. The only primary reason why I use that platform is just because it marks out the trades, so I can actually show you what I did visually, and then you can see that I was actually trading those things instead of me just talking about it. So yeah, it's not optimal. I think GFT is much more optimal to trade this with, but it can be done. All right, so let's look and see what I would consider to be tradable events this week. Now remember, they've got a big surprise, and then you got to have a technical, an exhaustion of momentum on a 1-minute or a 5-minute chart before I'm going to take a trade. So clearly, retail sales, big enough event, big enough surprise that was worth trading. Nothing else today was really worth trading. CNY is not a major trade on any of the pairs. Today, there's nothing on the calendar that is worth trading because there's no real serious data. And into tomorrow night, again, nothing really worth trading. Japanese data doesn't even really count. Tomorrow, the event that I would trade on my calendar, if I got a big surprise one way or the other, would be the UK CPI. Now, UK CPI is probably going to be hotter because the PPI was going to be hotter. And it'll be interesting to see if, for those of you guys who are going to maybe trade this, if it does print hotter, if you're going to get the big spike higher and then a retrace, which would confirm my type of methodology of fading that spike out for 10 points. So that would be the one event that I would trade. I may trade the German zoo, depending on how hot, how strong it is. It is not a very significant event. A much more significant event is the German IFO event. So tomorrow in the European session, only the CPI is worthy of looking. How big a surprise? And this is a very, very difficult question to answer. It's kind of like, you see it when you know it when you see it. For example, this is clearly a major surprise. Anything where you have more than 0.2%, 0.3% move on one of these events is probably worth trading. Is how I would say it. So tomorrow we have the UK CPI, and then the next event tomorrow that I would look at very carefully would be the U.S. retail sales. This is a big number. If let's say U.S. retail sales prints 1 instead of 0.6, that's going to create a spike in dollar yen. And if that creates a spike in dollar yen, that may be a tradable event to the short side for just a 10-point correction once dollar yen kind of exhausts its upside move. So the two events tomorrow, UK CPI, retail sales, that really merit consideration. Everything else is kind of tangential. Maybe the zoo as a possible trade. On Wednesday, the only report that I would really seriously consider would be the claimant count. Here again, let's imagine claimant count comes in plus 10 against minus 3. That's very negative. This very negative pound. The probability of the setup for me has been better than 70%. That doesn't mean it will be for you. It's just, the point being I'm saying is it's got to be 70% or better in order for it to be long-term accurate. So you have to, the critical thing here is you got to choose events that have meaningful, that are meaningful to the market. You got to wait till to enter until you get the right price, and you got to be very controlled in your risk-reward ratios. So it does require some discipline, but when you follow those precepts and you're selective, you can, it tends to be quite good. So yeah, I would trade UK claim account. The one important factor you want to remember out of all of this is that an hour later you're going to get the BOE inflation report. So if this claim account trade does not work in a half hour afterwards, like basically in and out, if it doesn't work by 5 o'clock New York time, I'm out of this thing because there's a much bigger event coming afterwards that could really screw up my position. Into the U.S. session, the PPI is really not worth trading. The building permits, not really worth trading. All of these events are so second tier that they are just not worth trading. I really can't bring myself to say this is a legitimate trade that you'd want to do. On the Kiwi side, this business manufacturing index could be possible trading if it becomes super negative. If it prints like, let's say, below 50 at 42 or 43 or 45, it prints below the negative because this is a PMI index, and that could create another big downdraft in the Kiwi, which could then be covered up quickly on a bounce. So that might be worthwhile trading onto Wednesday. Into Thursday, the one event that has been worthwhile to trade has been unemployment claims. This is a number that this is only one of my setups. I don't trade. This is not the only thing I do, but this is one of the setups that I trade because obviously there's about 5 or 6 opportunities during the week where you can trade this. There's a lot of setups that I discuss in my thing, but this is one of the setups. And then frankly, this is one of the setups that I trade that has, when you're disciplined, selective, and proper, has one of the best. I find to be one of the better probability rates of anything else that I do. So unemployment claims is another setup that I think is worthwhile trading on this thing. Philly Fed, if it's extraordinarily strong or weak, is also another setup worth trading for dollar yen because it could create a spike in dollar yen one way or the other. And then into Friday, the only event worthwhile trading is UK retail sales. This is a big event. Again, here, major upside. Let's say 1.5 up is going to create a major spike in the pound to the upside that could be favorable. Negative 2 in the pound would create a massive downward move in the pound that could then rebound to the way up. So basically, I have 1, 2, 3, 4, 5 events this week that are possibly tradable using this methodology. Other weeks, sometimes you have as much as 10. This is a very light news week, and you want to be very selective as to exactly what you want to do. of what you want to do. Now, for everybody who's here, I'm going to make an offer. If you guys email us your address and ask for it, I will email you back Kathy's this week's tradable calendar. And the tradable calendar that Kathy has includes all of these events and basically her view on it on a reactive basis, but it can also give you a very good look at what could be the good proactive, because believe me, the trades that are good reactively are trades that are good trades that are good proactively are trades that are good reactively. So I'm going to type in the address. If you guys email to this address, we will be happy to send you this proprietary calendar that we put out every single week for free. And hopefully, you'll be able to see some of these events playing out in action. So this kind of went a little longer than I wanted to. I didn't get a chance to show you a couple of my other setups, and maybe we'll say that for the next time we do a webinar. That's actually will be a good idea. But I want to review everything that I've talked to you about today. News trading on a reactive basis is actually counterintuitive. I fade positive news. I buy negative news. I do it in a very disciplined fashion for a very small amount of pippage with a definitive, very controlled risk. Because I'm not making a fundamental call on whether it matters or not. This is a very important thing. I am not fighting the market. I am not trying to argue with the market over the calendar. What I'm trying to do is exploit the liquidity dynamics of the currency market, where everybody moves one way like an elephant herd, and you get dislocation that allows you to trade on the side of the market makers and hopefully on the high probability side for the near term. Most of my trades are flow trades. Correct, genius. Most of my trades go with a flow. This is the one and only trade that I go counter flow, but then I do it in an extraordinarily disciplined, controlled manner for very specific, meaningful news events. Right. So, Michael, no, there's absolutely no suggestion to how to help this. This is part of this. The whole idea of trading these setups is you must accept its limitations. Those are like the line out of the movie, is it Cool Hand Luke? A man's got to accept his limitations. In order to be successful, you must understand that every setup will fail under certain conditions. And in a very, very powerful news event where the retrace is extraordinarily shallow, it will fail. My argument is that I'm only going for 10 pips. That's a very, very shallow retrace. Generally, that's a shallow enough retrace for me to recapture the P&L before it begins to start going out. And that's why I think a 10-20 strategy is the sweet spot of this particular event. If it's just retracing 5 points and then just running around, yeah, what we have here is a failure to communicate. Right, exactly. But that's the critical thing that I want everybody to understand is that if this setup is by no means foolproof, it by no means is 99% accurate, none of those things. It is going to fail. The critical thing is control your failures, focus on the successes, and when the dust settles, you hope to be net positive at the end of the week. That's the key thing. If I can be plus 30, plus 40 end of the week on this setup, that's a very, very good setup. And because that really adds up in a very controlled fashion over the so the other thing that I kind of wanted to show you before we all go, because I know time is running out. Where is this thing? Let's see if I can put this. For all of you who are interested, because you guys came into this webinar and you were so kind to listen to some of these ideas, we are keeping our subscription special where we're literally discounting 50% of our annual subscription in this particular link. If you click this link, you're going to get major discounts on the quarterly or the major discounts on the annual for the BK service itself, which does a lot of swing trading and all of Kathy's proactive trades throughout the week. So one of the things that, by the way, I want to sort of reveal to you is that the setup that I've showed you we're working very hard on incorporating these ideas into the BK service itself. So this may be a signal component. Those of you who are going to become BK customers could get this as an additional service, where I will be making these news calls for you. So I just wish you guys check it out, see if you like it, and hopefully you'll join the service for us, because we try to give you as much as we possibly can on the research side. Yeah. Oh, everybody's quoting Cool Hand Luke. That's very funny. No, Adrian, if you lose on one contract, you need 2 to return your money back, not 3. Your math is wrong. It's a 2-to-1 risk-reward ratio. So that's why you need to be 70% accurate. It is a negative. Yeah, it's not. Well, what I'm saying to you guys is that it's valid now. We're extending the subscription, even though it says valid to January 15th. It's valid now, and you guys are welcome to apply. We'll accept your the discount today because you guys were kind enough to sit in on the webinar. So, I'm sorry I didn't get a chance to show you the other setup that I do, my FX flow setups, but this actually gives us an opportunity next month to talk about how we can trade FX, how we can trade my flow setups as well. And that just gives us more opportunity to examine. In the meantime, you guys can try this out either on the demo or small accounts or large accounts, whatever you like, and come back to me. You can modify it any way, which way you like, and I'm happy to explore any further ideas. But the concept as is that I presented to you today, I think is a very, very interesting, although counterintuitive idea, and I hope you guys enjoy it because that is really how we trade news intelligently in a reactive manner. I will also be at the New York Traders Expo next week. Can't wait, with Joe Trevisani and Ed Ponzi and everybody else. So that will be a lot of fun. For those of you guys who are going to make your way out to New York, I hope you guys can see us there, and that would be great. Any other questions that you guys have? No? And yeah, as always, by the way, my YouTube channel is. Hang on, I'm just going to put up my YouTube channel link. Here's my YouTube channel link for all of those who want to look at the. And most importantly, if there's anybody who is not following me, you are doing yourself a huge disservice. Because I tweet all the time on Twitter, and everybody who follows me knows how active I am on that, and I do a lot of FX flow stuff. So I hope you guys, anybody who's not following me should follow me on FX flow because all throughout the day I generate a ton of different flow ideas for everybody who's on Twitter. And I constantly try to, to make it better. I mean, for those of you guys who follow me, you know that we took all the O's and 50 trades today in the European session, and they were great, right? So thanks, Joe. I'm glad you love the tweets. I'm glad you guys like the YouTube channel. I'll keep on doing this as long as everybody likes it. And thank you again. Thank you, everybody, for helping me out with writing down some of these ideas. And everybody who would love the free calendar, please just email us. We'll be happy to send it to you. And check out our BK subscription. Michael, all you got to do is just go to Twitter, find me at FX Flow, and say follow. Okay? I'll be back next month, and then we're going to do the FX Flow trades that month. Hopefully you guys find those interesting. Thanks very much. Wishing you guys the best of luck this week. Thank you. Take care.